Hi everyone, I'm Sisi Ma, Managing Director of Grow and Sell Your Biz, and the host of the Capital Raising Show. My hope is that by showcasing successful capital raises, you will understand how and where to raise capital and avoid making the same mistakes others have. We're very lucky to have here on the show today the founder and CEO of Super Rewards, Pascale Helyar-Moray. Pascale, thanks so much for coming on to the Capital Raising Show. How are you? Good?
I'm very well, thanks, Sissy. And thank you for having me.
That's good. Thanks for coming. So first up, are you able to give us a 30-second intro about Super Rewards?
Yeah, sure. So Super Rewards is a shopping platform where Australia's leading retailers pay cash rewards into your superannuation. So we are not a super fund. We are think of us as your power charger for your super. So we're compatible with any super fund or self-managed super fund. Right. The average cashback on the platform is 5%, and it's free to join and no hidden charges.
Oh, that sounds really good. Yes, I think I'd like some of that. Yes. Has COVID-19 impacted your business in a sort of a good or bad way? How has it impacted?
Yeah, well, it's been really fascinating, right? So to be an online, platform. So I suppose if we take a step back and we think about the proportion of online shopping in Australia. So generally, or pre-COVID anyway, the proportion of online sales represented about 9% of the total retail sales market. I've since read data that post-COVID, that number is now 11%. Because everyone has, was basically given a big kick in the pants from an e-commerce perspective, and we all had to learn how to shop online. So it was interesting, when COVID broke in March and April, our revenues were really down. Not because, we were exactly perfectly positioned for online shopping, obviously. We now have 280 retailers on the platform, including Woolworths, eBay, Apple, Country Road, The Iconic, Pet Barn, etc.
Wow.
But in those months of March and April, that's where there was a huge amount of panic, uncertainty, and basically everybody was rushing in store to stock up on toilet paper or supplies or whatever. And then that was March, and then April was when all of a sudden the job losses had started, and people were being very conservative with their spending until they had further clarity. So once JobKeeper was announced, and once the early access to super measures were starting to come through, that's when we really saw spending pick back up again, and that's at a consumer level. But we also, apart from being direct to consumer, we also have a strategy where we license our technology to the super funds. Okay. So the principle, the concept there is that a super fund member, let's say you're with ABC Super, comes to their superannuation platform to shop and earn super.
Okay.
So
interesting concept.
So it's, and that does a number of things. It really creates engagement, with your super. It helps, it helps you grow your super balance, and of course by adding, little bits to your super every month or quarter or what have you, it helps keep your super insurances in place, and also helps stop, if you've got a balance of less than $6,000, stop that money being returned to the Australian Tax Office for, because that's the new legislation. So what we found with our corporate clients is that for a while there, all conversations were off as they struggled to regroup, reprioritize internal projects, etc., etc. And ironically, it was at this time that I was saying, no, but COVID is such a great opportunity to rebuild your super, because everyone's lost so much money in the stock market or through early access.
Yeah.
But it is now that the dust seems to have settled a bit on the COVID front, and people are used to this new way of working. That all our corporate clients are saying, yes, so now what were we talking about 6 months ago? Okay, yeah. And can we get that live next month?
That's
okay. Right. So it's definitely it's been overall very beneficial for us.
Right. So is it only online shops that people can utilize the rewards for? Or
at the moment, we will be rolling out in store, yes.
Right.
But at the moment, just online, which is perfect in this time of COVID. So.
Yeah. Very good. Thanks for that info. So this is the capital raising show. So let's focus on the successful capital raises that you've had in the last year or so. I understand that you've had a couple of rounds, and your first round is maybe I'll start asking questions, right? So when was your round?
So we raised our first round in January 2019, and that was we raised enough to basically build the tech and get us to market. And we raised money from venture capital and private equity, and then so we launched Super Awards in October 2019. And then once we were live and in market, and we had some really nice numbers, then we went back out for another round. And this time we used a broker to help us, because by now we were a business with staff and all this other sort of stuff going on, and we just needed assistance in finding the right kind of investors.
Exactly, because you're the
that round. That's right. And it was pretty hectic. You can imagine we've just launched this thing to market, and we're every day looks very different, and all our corporate conversations all of a sudden accelerated because we now had a real life product to show people. And so we definitely needed help in just corralling some investors. And we closed our round just before Christmas of 2019, and we found that really interestingly, half our investors, not by volume but by number, were women.
Okay.
Which is a really, really high proportion.
Yeah,
really high proportion.
Unusual. That is definitely unusual. Well, why do you think that's the case?
Well, Super Awards is designed, so it's, firstly I should say, it's open to any gender, right? But it is designed for women, okay? And the reason that we developed Super Awards is because women in Australia retire with about half as much superannuation as men. Yeah. For a variety of reasons. But what when we come down to brass tacks, what we, women currently retire with only enough super for 6 years of retirement, but then they live another 14 after that. Yeah. And the reason they retire with, half compared to men, is effectively because if we think about the Australian female population, 18 to 64, so in that accumulation phase, a whopping great big 40% of women are not in the workforce. Yeah,
they're working at home.
So only, right. Well, that's right. They're part of the unpaid labour force.
Exactly.
And another 36% are working part-time, or casually to accommodate family responsibilities. So, this whole government and industry notion that women should top up their super is quite frankly ridiculous, because if you're not working, you don't have income.
Where do you get the money?
So how do you do it?
Yes.
That's right. So we said, well, look, women have all this responsibility, we look after generations up, down, sideways. And we also make 80% of household spending decisions.
Mm.
So let's join those two things together to monetize the unpaid labor.
Mm-hmm.
So that's, so when we were, talking about this and pitching to investors, the women universally got it. They were like,
that's right.
Yes. Either I've been there or my sister's there or, and there was just I'm shopping online all the time anyway. I'm doing country road shopping, or I'm buying pet food, or I'm buying, books for Christmas, whatever. I may as well be topping up my super. So I think just the simplicity really, and the no-brainer aspect of it was really what appealed to men, of course, that this is really simple, right? Okay. But also it's particularly to the women because it held such resonance for them.
Yeah, that's very much, it sort of certainly resonates with me as well. So did you find that in your first round, it took a while to actually raise? How long did it take you to raise the first round?
Probably 3 months all up.
Right. Did you have to pitch to hundreds of investors? Or is it like you selected the ones?
No, I had some investors. I had some investors in my network already, so just went to them and sort of fleshed out the proposition and so on. So and then I guess a lot of the the 3 months was really just scoping out costs and how much do we think we need and how much is this bit going to cost and so on. So it was very much a working partnership. Yeah.
Right. Excellent. And I guess they believe in you, right? The reason that they invested.
That's right.
Free money, basically it's a concept, right? When you did this. And so.
That's right. It was a pitch deck.
Pitch deck. Yes.
Yeah. It was a pitch deck.
Quite unusual for Australian, because I have helped so many startups to raise capital and realize that VCs in Australia don't really want to invest in anything pre-money. Not pre-money, sorry, pre-revenue. No. Pre-revenue. So like when you get to the first round, it's really just family, friends, and some people that are in your network already. So that is how you did the first round. And how much money did you get for the first round?
550.
550. And
so 550,000. Yeah.
Right. And so ultimately, I think I know the answer, but why do you think they invested in you? Why do you think they invested in this 550?
Yeah. So I guess a combination of things. So firstly, my background is in financial services, marketing and PR and brand building, right? So I've got 20 something years in that arena.
Looks like you're
21. I
also do that.
So kind. Checks in the post. But then I stepped out of the corporate workforce to have children.
Yeah.
And during that time, started my own e-commerce business. So that really fooled me in, tech and digital and just, e-commerce and startup. And then I went on to become, consultant on or advisor to a number of other startups. One of which is it's a non-for-profit. It's the Australian Gender Equality Council. So I'm director of communications there, and we're AGEC is an NFP dedicated to looking at the state of gender equality or inequality in Australia and producing research to try and influence, government perception, corporate perception, consumer perception. So it was really in my work with the Gender Equality Council that I was exposed to so much data and so many facets of government and consumers, and I could see that like the super gap for women is just nothing short of A, shocking, but B, not changing. And basically I became really fed up. And then thought, well, how when women, like if we put a dollar value on all the unpaid work women do every year, would add $2.2 trillion to the economy.
Yeah.
So how do we do this? How do we monetize this, women? Because guess what? Like, it's not like we're facing this looming problem of older women in poverty. It's here. Like 1 in 6 Australian women retires into poverty, which I think is shocking.
Yeah.
So I guess that that's a very long answer to say, to answer your question of why did they invest in me? Well, I had the financial services, marketing, PR, and brand building.
Yeah.
I'd started my own business before.
You're a serial entrepreneur.
I had tech and e-commerce. I had a serial entrepreneur, and also I had really strong domain experience in e-commerce and gender equality.
Yeah. No, that is a really great combination. Did you have any problems with being a sole founder? Are you a sole founder?
No, I have a female co-founder as well.
Oh, you do have a co-founder. That's good. Because I found I basically, people don't like just having sole founder, and they like to have co-founders.
That's right.
Yes.
That's exactly right. Because then there's a bit of a, I don't know, diversification of risk, and generally the two are complementary and balance each other out, and so on.
Exactly. But on the other hand, the co-founders need to really work together well. Otherwise it's will disaster. But looks like you guys
that's right.
working well together. So did you have any learnings from that process for raising that first series?
From the first series, or first round?
Yeah. Would you have done anything differently? Would you have
No, actually. No, I wouldn't. I guess when you're in the middle of raising, it always takes longer than you think it will.
Yes.
But that was not a new learning, but I was reminded of it that time around.
Yeah.
And for the second round, what were the learnings? Yeah, I do think generally that women are held to higher account than the men. So, and nothing against the investors that, who said yes. And we had according to our broker, we had an exceptionally high close rate, which is great. So that means that we, for 100 meetings, we close the deal on however many. But it was very, and it was interesting working with a broker, because they see a lot of startups, and they said, your metrics are great, and your deck is great, and you've got all your documentation, you've dotted your I's and crossed your T's, et cetera. But none, and we were going into these meetings, we'd been live in market for 3 weeks, and we're rocking up and going, oh wow, we've already got a few thousand users, and we've been on Channel 7, and we've been on Sky News, and we've got this corporate deal going on with this massive partner over here. Like, how many people can say that? But nonetheless, there were still some people who said, oh yeah, no, not sure you're progressed enough. And I would say to our broker, like, what more could we be doing at this stage? And he said, nothing. But I guess the truth is that some investors tend to invest only in their own image, and so there's a segment of the community who won't change. So I guess the trick is to find not those people.
Right investors for your business, most definitely. So
that's right. Right.
And for the second raise, how long did it take you to actually raise that? What was it? 1.1 million?
1.1. Yeah. So we, I guess from the time we started with the broker, maybe it was 6 weeks all up.
Okay.
Which was pretty quick, but it did include, like, we did go to New York right in the middle of it, because we won a scholarship to New York to learn how to scale into the US and so on. It was just like fabulous timing from that perspective, but it did mean that we literally weren't on the ground for 2 weeks of the 6, which was when it was just so great to have someone keeping everything ticking along in the background while we were literally in different time zones and so on.
Yes, very much so. And I remember working for one of my clients, and I was in Los Angeles at that time, on a business event. And she's here in Australia, so we were basically working 24 hours almost.
Hours.
Yeah,
Yes.
I mean, it's beneficial, right? Business doesn't stop.
Yes. No, that's exactly right. But you can't do investor pitches when you're like 17-hour time difference. Yeah. So that was yeah. So probably had we not gone to New York, it probably would have closed it faster.
Right. And your investors are all Australian then, it sounds like?
Yes, yes.
Yeah. And you said that 50% women. Are they all,
Yeah.
you had VCs, are they, women sort of focused VCs, or are you able to share who the VCs are? Venture capital firms?
Yes, so they're one's Australian and one was Australian based when we met, but has subsequently moved overseas. And in terms of yeah, so but very obviously very pro equality, right? And like in a genuine way, not just paying lip service. So because that is the trap that you can sometimes encounter. That's so right. Yeah, very genuine, and that's evidenced to me by the stories that they share about their partners or wives, right? They both, so obviously both the companies, that the key people we deal with are men. But they share stories of course we all do, about our other halves and so on, and they certainly, their other halves are real kind of go-getting corporate women, and so it makes there was a real authenticity. And I think the other thing that if I think about them, that they understand, this problem that we are trying to solve of the gender superannuation gap is actually a real and burning problem, right? That has come about through structural deficiencies. So it's not some wacky, esoteric, new social media platform or anything like that, and it's not something bizarre like, I don't know, AI and tuna fishing. Like, it's an actual real and burning problem that it's something that matters, and that's what really appealed to them.
And it's a big problem, and it's something that needs to be solved. So you got it.
That's right.
Yeah.
And 51% of the population, not only in Australia, faces the gender super gap, but the interesting thing is that the gender super gap, or the gender pension gap, stands roughly at the same percentage no matter where you go globally. So whether it's Singapore or the US, the UK, it's still, the gap between what women retire with and men retire with is anywhere between 40 and 50%.
Yeah. I think in China it may be smaller, because growing up in China, both my parents were working full time. There was no difference between them.
Right.
Yeah. But I think it may have changed since I left. After all, it was 29 years ago.
And yes, I know.
Right. So with the second raise, how many VCs and high net worth people did you have to pitch to? Was it like hundreds or less than that?
So the second round was more a combination of private equity and family offices. So oh gosh, I can't remember how many.
Just roughly.
Pitches we did. Maybe 12, maybe 15, something like that.
Pretty high close rate, if that's the case. Yes,
exactly. But I mean, again, that's where it was great to have the broker, because he would try and coordinate for a number of different groups to be in the one pitch. So that was, it just made it more efficient.
Very good. So what do you think ultimately made the second bunch of people invest in you? or in the business?
I think, you know, it's just really simple to understand. I think that's primarily its appeal. As a concept, it's a no-brainer, you know, like, so let's think about me as a you know, consumer. So obviously I have my Super Rewards account, and I have accrued, I was just looking the other day, I've accrued almost $500 in 9 months of Super Rewards, just through being me.
Right.
You know, I'm doing the weekly grocery shop, I'm buying new pajamas for the children, I coordinate the birthdays and Christmas and all these things. And so just the act of being me and spending the time facilitating life and, you know, everything means that I mean, that's $500 that I was never going to make in an additional top up. Who does, right? But so, you know, and the other thing that I really like about Super Rewards, and I say this wearing a consumer hat, is that I don't have to think about making super top ups. It's just happening in the background every time I shop. So I think the simplicity of the concept really appealed. I think the no-brainer aspect of the concept really appealed. I think, you know, just the traction that we were getting, obviously, you know, in both direct and in the corporate space really appealed. I think that, you know, my entrepreneurial background and, you know, sort of knowing my way around e-commerce obviously appealed. And also, last but certainly not least, a big shout out to all the retailers on our platform. Because they're brands that everybody knows and loves. You know, it's everybody knows Catch.com.au or eBay or The Iconic or Pet Barn or, you know, Adore Beauty. So, you know, these are not some, you know, low-level nascent brands, although we have some of those as well. But it's really just a real universe which has resonance and appeal to all age segments, all demographics. So it's not just for the high end, you know, and the more affluent people. This is, you know, one of our best retailers is Best and Less.
Right.
Yeah, and Catch and so people understand like there's something for everyone. And I think that really appealed as well.
Yeah, that sounds good. And I guess they're buying into the future as well. So, you know, when you pitch to them, you talk about, you know, when you grow up, what is it going to be, right? It's going to take over the world. It's going to help women with their, you know, super balances and all of those things.
Yeah, that's right. And I think there was also that feel good factor, right? You know, we're not.
You can say it's an impact investment, right?
Exactly. And you're actually making a difference to a number of people's retirement outcomes. So there is the feel good aspect for sure. And I think, you know, the authenticity really was a very strong point. And we see that as well on the corporate side. So, you know, we are very much mission first when it comes to talking to the super funds and so on. And I think they understand that we're not, like, obviously we're a for-profit business, but like we have a genuine burning desire to affect change. And that very much comes through in our conversations with them.
Yeah. And in terms of your revenue before the second raise, you would have had some revenue, right? Or minimal revenue?
Zero. We had just launched. Zero revenue. Yeah.
But you have got, you know, some pretty good increases since you launched, right? You know, basically.
Yeah, exactly.
Good traction, and you would have demonstrated good traction over this period, and then, you know, next time you're planning to raise, then you have this history to show. Yeah,
that's exactly right. And so for us right now, the focus is really on just signing up as many corporates as we can, because when we license our tech to a corporate, it means that we get access to, and by corporate I mean like a super fund, it means that we get access to literally tens, if not hundreds of thousands of users who are in the mode of thinking about super, right? So it's just it's a win for the user and it's a win for the fund. So and so that's really our mission, is just to secure as many corporate agreements as possible, and in doing so that grows our user base.
Yeah, most definitely. Have you heard of Verve Super? It's actually
yes.
So there's
yes.
a good connection there. If they sign
up. They actually, unfortunately, they don't have a BPay number. And we need the BPay number to be able to make payments. So I'm not sure if they're working on that. I mean, I do know Christina, who's the founder of Verve. But we've had quite a few, unsurprisingly, we've had quite a few women say, oh, where's Verve Super in your list? And we have to go back to them going, they don't have a BPay, so we can't make the payment. So yes, but I hope that they're getting onto that, because it's a completely missed opportunity otherwise.
It sort of makes all the sense that the two, your two organizations are connected.
That's right, absolutely. Maybe you can put in a good word.
Well, she's like, I think she's a venture for CEO as well. Yeah. So
right. Okay.
I think she's actually one of the 5, I think, people who got or ventures that actually got funding from CEO for this.
Right.
Yeah.
Right. Okay. Okay. Good.
Yeah. So definitely, put in a good word. So do you have any final, advice for entrepreneurs who's looking to, raise their initial, seed funding or second round of funding? What would your advice?
Well, I would say that you need to have all the answers. You really do need to have all the answers, and also be open to feedback in a nice way. Of course. So some potential investors like to try and rattle your cage, and you've just got to be prepared for that. They might want to poke holes in your argument. They might want to just unsettle you and see how you respond. So I think if you know all the answers, and if you're your domain expert, and you can evidence that in the numbers as much as possible, then you're just going to win them over.
What if you don't know?
You say, I'm going to get back to you.
Yes. Can I take that on notice?
That's right. That's exactly right. And always be open, right? And open to keeping the conversation going. And I would also say another piece of advice is just because someone has said no this round doesn't mean they're going to say no in the next round. So always maintain an open dialogue and just keep the channels of communication open.
Yeah, that's a really good advice. Yeah, because some of them may say, this is too early for me, come back in a...
That's exactly right.
Over
in a year or whenever. Yeah, that's right.
Some of them do have thresholds, I know. Some of the corporate VC, it's like, $3 million of revenue, that's a minimum, we will start looking at you. So
yeah.
So
that's right.
Future of Super Rewards, are you looking to expand into different countries?
Yes. So I think we'll be in New Zealand before too long.
Okay.
Things are looking really good there. And we've got some really good product innovation coming up.
Yeah.
So and some new features to roll out. So I guess it's a multifaceted approach. It's just, as I mentioned, signing on more, corporate clients, launching new features, innovation, and international expansion, really. And that's all by next Tuesday. Yeah, I'm kidding.
You mentioned that you were going to US. So was US the next one after New Zealand?
Perhaps. I mean, the US is a really big market. It's absolutely massive. But the whole COVID thing, right, has just put a total handbrake on.
That's right. Yeah, you don't want to.
You know, no, and you know they've got enough problems to deal with right now.
Yeah.
So so we'll see where the next country after New Zealand is, but certainly you know, a New Zealand launch would give us a blueprint or a template with which to scale into other geographies. Yeah.
So you're looking to raise capital for that launch into New Zealand, or you just?
Yes, we are. We're looking at a joint effort between ourselves and a local consortium in New Zealand. So you know they're shouldering the bulk of the cap raise.
Right. Nice.
But we're able to point to, you know, our success in Australia and say, well, this is how we're doing, and so on.
Yeah, sounds good. Excellent.
Yeah.
All right. Well, I guess that's all for the major part. Pascale, thank you so much for all your insights today. And
thank you so much.
You've provided enormous value for our listeners, and I'm sure they will learn a lot from what you're saying. So thanks everyone for listening. And if you want to hear more about this topic and others, go to my website. As Sir Richard Branson said, learn to raise capital by any means necessary. Tune in on the Capital Raising Show to hear another successful capital raising experience. Thanks again for listening.